Hey traders, looking at Novavax today, which I haven't looked at in a long, long time. I'll probably upset a few people. It's a very emotional ticker. I have upset a few people in the past on it. Maybe now they have changed their mind. But anyway, regardless, if you like the content of this video, the purpose of it is to just learn something. Okay, clearly this is not a tradable stock. Look at it. Let's learn from something from this mess. Nothing I say reflects badly on the company itself. They did great work. The vaccine is saving life probably. And so it's strictly price action and see if we can learn from it. If you like the content, give it a like. If you don't like it, give it a hate. Comment if you want to debate it. Keep it civil. Subscribe to the channel if you don't already. Here we go. All right, so looking at this chart, doesn't matter what the ticker is. This is the daily chart, about a year's worth of data. If I wanted to make a decision based on the chart, there's no way I can make a decision. The only thing I can say clearly is that there are selling rallies. That's why we have lower highs and lower lows going down without any signs of stabilization. You're saying, but it's stabilizing here. Okay, so what about here? What about here? What about here? You see what I mean? It has happened before, and every time it ends up trapping more bulls. First thing I would do in a stock that looks like this, number one, I wouldn't average down. First of all, you should never average down in anything ever. I don't know one successful trader that averages down. The smart ones average in. What does that mean? Instead of taking a full-size position at once, they know they're not timing it perfectly maybe, so they take a partial position and they add later. That's different than averaging down. Averaging down is taking your risk and then the stock gets hit in half and then you double your risk. You just made your problem bigger. Whereas the other one, you took your problem in pieces. So you end up coming into a better price. Okay, so what do I do when I can't see left? I zoom out. Okay, so now we know that we gave up the entire rally of the pandemic. Interesting that it started rallying before the pandemic in January. Okay, somebody may have had foresight. And then it took off. So I have to tell you, because I know the stock, I used to invest it on the bullish side in 2016, I believe. This is not the first time it does that. In fact, it's not the second time it does that. This is not the third time it does that. So it spikes to high heaven, and it falls, spikes, and it falls, spikes, and it falls. So clearly this is an emotional stock. So let's just address what the lessons that we learned here. Look at it. You can almost copy, mirror image this to that. Spike, spike, a bigger spike, a letdown, try to hold, letdown, try to hold, crash. Okay, so I rode this. Remember, this was 20 times smaller. So any number you see here divided by 20. Those are the numbers. I remember getting long at 12, getting out at 16, but they were up here. And then it collapsed, and then I bought 80-cent calls when it was under. I bought $1 calls when it fell under 80 cents, and I made money on that recovery. But that was years ago. And then the pandemic hit. So let's focus on the pandemic. What can we learn from this? So breakouts, clearly this was the starting point, and now we're back at the starting point. Why do I say clearly? Now I switch to a weekly chart to eliminate the noise a little bit. Look at that. That was clearly a week of breakout. So now we're back at the base. We had another base. We came up to here. That was the height of the pandemic euphoria. We gave back some. We came back, and we didn't even battle over this one. Maybe we did on the daily candle. And we went to high heaven. We came back. These are weeks, so that's a good collection of consolidation. And look, they held. That is normal price action. Abnormal size, but normal. You go back to where you had a solid footing, and here there was a good base. They rallied. They came back to it again. So now the bulls are comfortable with 119, 120. Let's round. 125 actually, as solid base. And then they go up to here. They don't even match these. And then they come back, and they tried once, 1 week. They tried once the second week, and the beginning of the end started in January 22. It didn't help that the market itself topped here. This stock topped here. So the stock market took off in 2021, and it topped in the fall season of 2021, kind of when Bitcoin did too. This one topped earlier, and it went. And once they lost this, they should have never, the bulls should have never tried to catch it again. They should have gotten out, and that's it. Look at the size of this, whatever you want to call it. It's not quite a head and shoulders, but when a stock defends a place so vigorously, and the moves are so violent, once you lose that place, you're not likely to recover it, and every rally thereafter becomes a sell the rally for machines. So could we have foreseen the size of the drop? So if we look at the 160 candles, 160, so clearly that takes us negative, which means, get out. I did the same thing with Hyliion, and I got a lot of flack for it because it's an emotional stock. People love the stock. People were afraid of the vaccine, of the virus, so they hung on to the vaccine. So the idea seemed like slam dunk. I learned a long time ago, whatever seems like a slam dunk, run away, because it probably isn't a slam dunk, and you're going to trade it emotionally. So what do I do with it now? I wouldn't do anything with it. It's under $1. It's $18, Nick. It's not. If you think about it pre-split, it's split 20 for 1. So they reverse split it so it doesn't get delisted. In 2019, middle of the year, before pandemic hit, they were going to get delisted because it was under $1. So, or close to it, I don't remember. So they reverse split it, and then the pandemic hit. So if you want a real number, it's 18 divided by 20. That's the real pre-split price. So what do I do with it now? If I'm trading short term, this is the short term price action. Even on the short term level, lower high, trying to put a floor. Now the only thesis that I see is if I go to the weekly or the monthly. Let's go to the weekly. We had that candle, that one. So we are here. So, and look, it's pretty bifurcated. So if somebody has that thesis that this is it, this is the bottom, that's not my thesis. If somebody has that thesis, okay, I see it. I see why you would think that. But if you have that thesis and it goes below those numbers, I would get out, because that's my thesis. That would be that person's thesis. And if they say it's as low as it got right now, it based at 1750, pick a number. And if that person says I'm long based on that, that person should also say I'm out because I lost that, because that's my reason to get in. Okay, I'm telling you, the machines are selling it mechanically as soon as it hits a moving average of sorts. So 18.5, 19 is going to be met with selling. The good news would be if you can take out a prior fail. So if you can hold this long enough to take out that, then you may be building something. Maybe. Because now you have a descending trend and you want to swing sideways a little bit, establish a base, start building a higher low base, and then attack prior fails one at a time. This is the first one. This is the second one. These are 2, 3 later. So that's how I would trade it. So what did we just do? We learned to not average down, but average in. We learned that. We also learned to not fight the tape once we lose a very, very emotional level, which is this one. We also learned to not be emotional about things and to see how we can trade this going forward, which is on the very short-term time frame. If somebody's still thinking up and they're not already long and they want to trade it up, then I would place a stop below a certain level and watch for a high or low trend. If it's not there, I would get out. Simple as that.